Yeah, good afternoon, ladies and gentlemen. We are glad to present our weekly analytical review of Forex market. Last week, the euro-dollar pair was trading in the region of 10900 and didn't manage to move away from this level. At present, critical for bulls seems to be the level of 10960 that coincide with 50% Fibonacci correction. Its breakout would lead to a growth continuation towards the levels of 11040 and 11100. A breakdown of the level of 10825 that coincides with 38.2% Fibonacci correction would open the way towards 10730 and 10660. Traders should bear in mind that this week markets are waiting for a number of important events: an interest rate decision by the Fed, April data on the US labor market, and the second round of presidential elections in France. While waiting for the news, the market remains calm. It's better to wait for the key levels breakouts before opening positions. Last week the pound-dollar pair was trying to grow beyond the level of 128.85 that coincides with 61.8 Fibonacci correction, but currently returned to it. Its breakdown could lead to a full continuation towards the level of 127.20. Otherwise, the growth will resume to the levels of 130.00 and 131.00. Technical indicators suggest a full continuation. The MACD histogram starts falling in the positive zone. The stochastic is leaving the overbought zone and forming a sell signal. In general, the price has further fall potential after a consolidation below the level of 128.85. The dollar-yen pair continues trading within a descending channel and is currently heading towards its upper border near the level of 112.90. From this region it is likely to reverse and start falling towards the level of 111.20 and 109.90 that coincide with the middle MA of Bollinger Bands. Now, technical indicators do not rule out a growth continuation. The MACD histogram is about to enter the positive zone and form a buy signal. The stochastic is in the overbought zone but directed up. In general, the pair has potential for some further growth. Last week the Australian dollar-US dollar pair fell to a cluster of Fibonacci corrections near the level of 0.7440, but at present corrected to the middle MA of Bollinger Bands in the region of 0.7530. A price consolidation above this level could lead to a growth continuation towards 0.7600. Otherwise, the price could return to the level of 0.7440. Technical indicators suggest further growth. The MACD histogram is shrinking in the negative zone, the stochastic is directed up. In general, growth could continue after a price consolidation above the level of 0.7520, but there is also a chance the decline will resume. Last week the price of gold was falling and at present is heading towards the lower border of the ascending channel near the levels of 1248.00 and 1240.00. Here it is likely to reverse and start growing towards the middle MA of Bollinger Bands near the level of 1269.00 and further up towards 1277.00. Technical indicators give contradicting signals. The MACD histogram is falling in the positive zone, the stochastic is trying to turn up near the border of the oversold zone. In general, the instrument has further fall potential. This is all for today and good luck with your trading.